Good evening, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to webinar on how to trade the market open. So it's one of the very interesting topic, and most traders they want to know how to trade the market around the open. Or the first one, are how I should attempt to trade the markets. So that is what we're going to discuss in this session. And my name is Rajendran. I'm the founder of Market Calls, co-founder of Traders Cafe, and Traders Cafe co-founder of webinars. I've been trading in this market since 2006 onwards, and I had closely written 3,200 plus articles in Market Calls since 2007 onwards on various technical analysis topics, ranging from systematic trading, automated trading, trading softwares, market profile, and order flow. My core expertise is on market profile, order flow analytics, and especially on trading system development, which I've been doing since 2009 onwards, right? So, and so far I had published more than 60 plus indicators in my portal. So if you're an AMI broker user, you should go and check out the website. And I had trained so far closely 1,000 plus professional traders on primarily on market profile, order flow, and AMI broker based trading system developments. And as a trader, I used to trade using my analysis is primarily on softwares like AMI broker and Ninja Trader. So most of my studies are in AMI broker and Ninja Trader. Most of my system based studies are in AMI broker, and especially market profile and order flow. I use primarily Bell TPO based indicators, the market profile and order flow indicators. So my nature of trading is primarily on directional trading. I prefer to trade mostly in index futures and index options, mostly intraday and very short-term trades. And I also prefer to trade these days in USD/INR futures and options. So very few positions in stock futures I do, very less often, but most of my trades are in index futures and these days in USD/INR as well. So in today's session, we are going to talk about the importance of market profile and why you should use market profile, especially if you want to trade around the open. So before getting into the session, just give me the quick confirmation about the audio and video quality. There is a Q&A section is there, and the Q&A section, you can go and answer your questions there. I mean, you can put up your questions here, whatever the questions you have, or any questions you have, you can always place your questions in the Q&A section. All right, great. Thank you, Apurva, Manoj, KV Rao, Kishore Kumar, Pramod Chaudhary. All right, great. And thank you everyone for confirming. Hope the audio and video quality is really good. So why market profile is so useful tool? So that is what I'm going to talk about it. See, if you understand, market profile has been developed around 1985 by Mr. Peter Stadelmayer. Right? Peter Stadelmayer was seeing a very recurring pattern. Right? He was amazed with that pattern, why it was occurring again and again and again. If you understand what I am talking about, I'm talking about something called profile distribution pattern. Now, how many of you are very new to market profile? If you're new, just type new in the comment section or in the Q&A section. I just want to know, I just want to have a fair idea how many of you people are very new to market profile. All right, great. Lot many people are very new to market profile. So somebody was even asking which is the best auto buy and sell signal software. Anyways, in today's discussion, we are not going to talk about the buy and sell signal software. In fact, market profile itself doesn't provide any buy or sell indications. But what from the market profile, what we can use is how I can interpret today's information, what is happening right now. What is happening right now is what it helps the traders to make use of those information to take better decision. And the repeated pattern, which I want to talk about, what the Peter Stadelmayer was talking about. Right? So Peter Stadelmayer was seeing a profile distribution pattern. Most likely, when we are talking about market profile, we talk very often about the profile distribution pattern. So there is a price discovery process which he was able to identify. So let me tell you what is the price discovery process is all about. So a little bit theory over here, and then we quickly move on to how we can understand the structures and how we can understand what is really happening in the markets, who is trying to control in the markets, in today's market, whom we are dealing with. That is what we're going to look into that. So first of all, the core idea is, first of all, we need to know what is the price discovery process. Any idea what is the price discovery process is all about? So it looks like a little bit theoretical, but it's a very practical thing. Every trader should know what is the price discovery process is all about. So price discovery is nothing but simply finding the buyers and sellers, or matching the buyers and sellers. That is what the exchange does, right? Exchange does what? Any exchange in the world, it connects the buyers and sellers. Even if you go to a local mandi, right? Even if you go to the local mandi, what it happens there? You're a buyer and you go and buy vegetable shop, and you buy it from the seller. So it's the same thing what the exchange also does that. But here the price is fixed by the buyer also, from the seller also. If you go to the vegetable mandi shop, right? So it's more of a supply and demand game here, because based on the supply and demand, the vegetable price is fixed there. Whereas here, the price discovery in the exchange is most likely exchange, or they call it as a marketplace, right? It's basically a place to go and facilitate a trade. So these days we meet online. At least back in those olden days, back in 1985, people physically go to the floor, or they call it as a trading pit or a trading floor, right? So in the exchange, you will be able to see that the buyers and sellers can drive the price up. Buyers can drive the price up, and sellers can drive the price down. So if you see that if the price is moving up, it attracts more and more buyers. So this is a very well-known phenomena back in the olden days, not now, but right from the 17th century. It's more of a supply-demand game, you know that, right? So if the price keeps on moving up and up and up, what happens is that it attracts more and more buying, right? Or if the price keeps on going down and down and down, so it attracts more and more selling. Of course, you would have been seeing the recent phenomena. The recent phenomena, what happened? From 12,400, from there onwards, Nifty started sliding. When it started sliding more and more, it was sliding even more further, because more and more fear is getting generated. A lot of negative news, a lot of economic tensions, and a lot of the COVID-19 fears has been there, and the price was attracting more and more sellers as the price keeps on going down. Maybe I guess I would like to take about the recent Nifty charts. So let me pull up the recent Nifty charts. So here is the Nifty charts of the last. I'm just going to the daily chart. I'm going to show you. Right. So what is happening here? The recent downtrend, it is attracting more and more sellers. That's part of the price discovery process. I'm talking at a macro scale. However, the downtrend price is attracting more downtrend, and that downtrend is attracting even more downtrend. At some point of time, this downtrend is coming to a stop. So why is it coming to a stop here? Any idea why is it coming to a stop? What do you think? Why the price stops here? You just type in the comment. Why do you think the price stops here? It was keep on selling. The lower price is attracting more fears and more sellers, and that is created like an avalanche process, and that price is even more attracting more and more sellers. But somehow the price got stopped here. So what happens here? Why it stopped here? Any idea what do you think the price stops here? You can just type in the Q&A section there. So people are saying that it's a support level, buyers came, right? So what the auction process theory says is that, so we have many thoughts, right? So probably its market is oversold, right? So and some people are saying that it's at support level, and some people are saying that markets are tired, the tired markets. So we have a lot many points. So probably some people are even saying that buyers arrived. Buyers finally arrived. But what the price discovery says is that, so let me go back to the slides, and I'll show you what I am thinking from the. So here, as per the price discovery process, the market auctions up. That means market keeps on going up until there are no more buyers, and then it reverses and market moves down until there are no more sellers. So sellers are keep on selling and selling and selling and selling At some point of time, the markets has been keep on coming down. At some point of time, there are no more sellers. So no sellers here. So when there are no sellers, what happens? It tend to go upside. So if the market is not able to facilitate the sellers, buyers will be able to take control. That is what it is happening. There was fear and fear and fear in the market, and at some point of time, there was an extreme fear. It's not only market is driven only by supply and demand. Markets also driven by fear and greed as well. And there are a lot many things involved in that in the price discovery process. One of them is the buyers and sellers who drive the price up and down in the markets. All right. So when the market cannot facilitate the trade on the upside, it will generally test the downside. If the market is not able to facilitate the trade on the downside, it will facilitate the trade on the upside. That's what is happening. So there is not much of enough sellers. Probably we can say like the number of buyers are more than the number of sellers. And this price, probably when the price was coming down, the price was more attractive, maybe more attractive for many investors. Attractive for many investors. So that's why there was a quick reversal from there. Many investors would have been bought. Many compared to the sellers, more investors would have been bought at these levels. That is why it had took a support. It is not because some support level, price has been reached some support level and then price stopped. It is down move. It is because price was more attractive to the investors. Probably for the higher time frame players, it is more and more attractive. So now how this is more connected to today's things, that's what I'm going to talk about. How the price discovery process happens. I'm going to show you from an intraday perspective. All right. So let me go and show you the last, probably the Monday's auction process, how it happened. So around the open, what we had seen and what we can learn from the last Monday's price action. That's what I'm going to show you. Yes, I'm having what I've done is I have prepared a kind of an replay of last 13th April activity. So look at the structure. I'm going to show you the price discovery process, how it happened. So you can see here, let me pass the video. Very interesting thing was happening. So market profile basically uses letters. So for the people who are very, very new, you can see that here is the open. This is where the price opened. When the market opens, here is the opening price. You can see in the form of a letter O. So red color letter O is here. And then whenever the price was keep on moving up and down, it prints the letter A. So the letter A comes from 9:15 to 9:45. It just tracks the high and low. It just tracks the high and low of the first half an hour bar. So basically every letter comes for 30 minutes. Every letter comes for 30 minutes and each and every letter is called as a TPOs, right? So basically we use this to understand what the buyers and sellers are doing right now. And moreover, who is trying to control this market? Today, is this market is controlled by intraday traders, or the market is controlled by short term or long term? Who is actually coming into the markets? So that based upon who is coming, can we explain whether there is an opportunity at the opening at all or not? Can I trade at the opening or not? So if you see the market profile is one of the nice tool. It's kind of a graphical tool basically to explain where the price is trading relative to it. It is one of the good tool to visualize the highs and lows. Basically, you can see that this is previous day high. So this level is previous day high. And this is previous day low. Probably this is 2-day high, and probably 2-day low. It's very difficult to show because it's way down back. So the highs and lows, you can see that price opens inside the range and it keeps on trading inside the range. Every day we get a profile. Probably this is last Thursday's profile, and this is last Wednesday's profile. Of course, Friday is a holiday, and this is Monday's price activity. So let's say Monday's, let's see the Monday's price activity, how it is going on, right? Are we clear? You're able to understand what I'm trying to say? If yes, you just type yes, so that if you're able to follow up with me, you can just type yes. All right, great. Thank you. So price clearly opened inside the range. What happened on that day? Price clearly opened inside the range. Opened inside the range. When I say opened inside the range, what I mean to say is that price opened inside the previous day high and previous day low. So price is open between the inside the. So what do you think? What do you think the confidence? Who is showing more confidence? Do you think at this point of time, are there anybody showing confidence? The buyers or sellers? Who is showing confidence as per you? So price opens inside the range. Just it went slightly up. What do you think? What do you think about the confidence? Or as a trader, how do you feel taking a trade here? If you're trading a longs or if you're trading a short, as a trader, how do you feel yourself? The feel is what I'm asking. How do you feel as a trader? You have the great confidence that the market is going to go up or the market is going to go down. What kind of confidence do you think? Especially when the market opens inside the range. So most of the time, market opens inside the range. It keeps on trading inside the range. So basically, it's most likely no confidence day. It's one of the no confidence day. Neither the buyers are not showing confidence, neither the sellers are not showing confidence, unless they are going to break any of the major reference level. On that particular day, there are not much of a major reference level. Probably the major immediate reference level which I was watching is the previous day high and previous day low, so that I can understand that there is some change in the confidence. But that particular day, if you see, let me run the charts here. So of course, I'm running at a 15x speed. I'm slowly going to increase the speed as well. So you see that the price started dropping down. It went down below the open. You can see that it started to keep on going down. Little bit of pullback, not much of an pullback is coming in. You see the hash, there is a small hash symbol is there. The hash symbol shows the where is the current price action is. There is a small red color hash symbol is here. Probably you'll be able to see the hash symbols over here. Oops, it went here. So you can see that what is happening here is that price, it keeps on dropping. That is what we call it as liquidation. Somebody who is liquidating this market, somebody is trying to book profits. That's how you'll be seeing that such kind of a linear. You see that price keeps on dropping. That is what we call it as a long liquidation. That is a signature that somebody is booking profits. It's not most likely fresh yards. Most likely it is booking profits. So you'll be able to understand what is happening inside the markets. Somebody keep on booking profit. That's why you'll be seeing that it keeps on moving in a straight line, right? Without stopping. You see that straight line? That is most likely because of people booking their longs. People keep on booking their longs. Somebody, maybe some one trader or two traders who is holding a bigger position, is keep on dumping his positions. Because in a regular market, what happens? The market keeps on moving like this, right? So most of the time you would have seen that the market keeps on moving up and down. But if the market is keep on moving down, probably one or two, three traders are probably big traders are coming and let me stop the price here. So when the market is moving in such a linear way, what happens on that particular day is that usually the sellers keep on selling and selling and selling. In fact, they came very close to the previous day low. That's what I've been watching out. I was checking out that probably this price action could go and test the failed auction sell. So there was a failed auction. There was an auction failure on 9th of April. So it is kind of a breakout failure, we can say, like one form of a breakout failure. And I was thinking that maybe that level could be touched. So what I've seen at that level is that, so somebody was keep on selling, and they are probably big traders. They keep on selling. Maybe one or two, three, four traders who having a bigger position, they keep on selling these markets. And you see that the letter A stops when from 9:15 to 9:45. That's what letter A goes. And letter B goes from 9:45 to 10:15. So the next letter B started. So by the time 9:49, you can see the timing parallelly there. So what was happening there is that first half an hour price keeps on dropping. It stops there. The letter B comes exactly from the lows the B started. So it's something like It dropped, letter B, and then it went up. Letter B also, letter A period low and letter B period low. You see that the letter A period low and letter B period low are exactly same. Now, these kind of activity is most likely done by small traders. So you see that the first what we had seen, it's a period drop. The A period drop is more of a what? A period drop is more of a long liquidation. That's most likely done by some short-term traders. They might be started booking their profits. They keep on booking their profits. They continuously keep on exiting their trades. This could be done by couple of 1 or 2, 3 or some 2 or 3 dominant traders. They might be keep on pushing that move. So some dominant traders keep booking profit at A period, keep booking profit. But what I learned at the B period is that A and B are exactly same lows. A and B are having exactly same lows. You see that lows? So from the market profile, what we can see is that this is A period high, A period low, but B period low also exactly same as the A period low. That means exact same lows. Now comes the question, who's buying there at the B period? Who's exactly buying at the A period low? So that's most likely done by some intraday traders. Most likely intraday scalpers, they play like that, intraday scalpers. So I can understand by looking into the structure, I know that what kind of trader I'm competing with. I know that at that place, the letter B period low is most likely initiated by the traders. They are not investors, they are mostly traders. So they're not serious money. So on that particular day, I'm not seeing any serious money on that particular day here. So I thought like maybe this level could be broken because it's done by some scalpers, some small traders are coming and initiating longs. Who doesn't have it? Because that is the level they watch. Mostly they watch the today's low or previous day low, today's high or previous day high. So most likely intraday scalpers, they watch levels, they trade only the levels. So they do some quick entry, they make some move and they will exit. That is what the traders do. So let me show you that in my commentary, I said like, I've been showing them, I was doing this live session there. And in fact, I said like that level can be broken. So that's what we call this as an AB poor low. We have a special name to this. It's called AB poor low. AB poor low means it's not a good low. That level and that low can be broken because there are no tails there. There are no tails. No tails. If you see, there are some tails over here. Previously, there are some tails. You can see the letter D. That's a tail there. That's a downside. Upside, not much of a tails on that particular day. So here you can see these are good tails. These are good tails. So that particular day, the tail has not formed yet. So that means it's more of a weaker reference. That level can be broken down. So that's what we can understand from that auction. So let me run the auction here. So let's see what I'm trying to explain. The purpose is to try to explain what is a price discovery process. All right. So that's the basic of the auction market theory. You can see that the letter A got broken later on. So now that letter A, that AB got broken and some tails got formed, most likely. So usually I prefer to use an 1 point TPO, but for the players who are very new to market profile, I'm showing them as a every 5 point I'm showing the letters. So each and every TPO is 5 point TPO over here, which I usually don't use. I use the different TPO levels. So now you see that letter, each and every half an hour, the letters are keep on generating. You can find a pattern over here. A particular price level at this point of time, you can see that letter A, B, C, D. That means that 8690 or 8670, that particular price is getting touched many times, almost 4 times. 4 times this price level got touched 4 times. 4 times here, 4 times here, and 4 times here. Whereas here it touched only 1 time. At the tops, the tails got touched 1 time. So this is what a price discovery process is all about. So what the market is trying to do is that at what price level where more buyers and sellers can come and trade. This is what most of the traders will look for. This is more of a trading zones. Traders are coming and trading in this band. These kind of bands are not done by serious traders. If serious traders are there, they will be moving the market in a trending manner. Markets are not trending. Markets have started doing something called balancing price action. This price action is called what? more of a balancing price action. So it's more of a balancing price action, and it gives a lot of comfortness for the traders who want to accumulate or who want to distribute in a very, very short term. Even big traders, I'm not talking about institutions, I'm talking about big traders. I'm not talking about big investors. Remember that I'm not talking about bigger institutional investors. I'm talking about big traders. They also accumulate, they also distribute. They accumulate for probably they accumulate for 3 to 4 days, or even at times they go for 3 to 7 days of accumulation, and they distribute it, and they close their position. Distribution means they close their position at profits, close the positions. So like big investors, they also do accumulation. They do accumulation for months. They do accumulation even for years also, because some bigger institutions. Whereas I'm talking about big traders, mostly short-term traders. Most of the short-term traders are big traders. So we call them as an kind of an wholesale dealers. They are dealers in the markets. Most likely they do business with the retails. So they also accumulate in the markets, but fundamentally they are traders. They are traders and they accumulate in the markets, right? So they like to accumulate in these zones. So most likely they want a fair price. What the short-term traders they want is a fair price where they can accumulate more, because their quantity of their size involved in their markets are pretty much bigger. They are not here to trade 5 lots, 10 lots, probably in hundreds and thousands their lots are. So they will be taking a couple of days to add. They'll be adding to their positions. They'll be adding to their winning positions, and they'll be keep on adding throughout the day. So they want a fair price for that day. So that's what we've been looking into it. So activity is developing lower. That means not much of a serious money is there. There is no investing money in this kind of market. These kind of markets, there is no investing money. At least investing money is not dominating this market. Who is dominating is most likely some traders are dominating. These kind of market, it's mostly dominated by traders. Dominated by traders. Some traders, it could be intraday trader, or it could be a scalper, or it could be some short-term big traders. Short-term big traders. But who is not present in that market is that investors are not present in that market. Maybe for various reasons. Maybe they might be waiting for the government to do some announcement. For example, today 10 o'clock, there was an announcement from our Prime Minister, PM Modi, that lockdown is going to get extended. So maybe the long-term players might try to come and play once the uncertainty is over. Because when there is an event, it's more of an uncertainty. Nobody knows what is going to happen unless there is an announcement. And on top of that, there is one more news which has been coming up, like IMF, the growth cut has been there. So they had reduced their growth from 4.9% to 1.9, something like that. So there are that kind of news announcements are there. So most likely, when there is an uncertainty in the markets, usually the larger money, the bigger investing money will be mostly missing in the markets. So who trades in this kind of markets is mostly dominated by traders, mostly traders, small traders, big traders. They are the one who comes and compete in this kind of environment. So what is totally missing in that market is that investing money is totally missing. So let's run the activity. You can see that letter D, which usually, if you see the letter D runs from 10:45 to 11:15. All right. So let me run that activity here. So that is an indication that still the price haven't broken the previous day high or previous day low. See that the previous day high and previous day low, price went to the previous day high, it haven't broken, it went to the previous day high, it went to the previous day low, it haven't broken either side. Now these kind of markets is what we call as a no confidence markets. No confidence markets are mostly controlled by traders. Controlled by traders. Unless it is breaking some key reference level, some level is getting broken. As long as it's not getting broken, we know that these kind of environments are mostly controlled by traders. Right? So if you know that it's controlled by traders, then most likely the opportunity, the trading opportunities are the edges. We need to know what is the edges are, where the tails are. Right? So when the tails are getting formed, probably that's one of the good places to look for a trading opportunity. Let me show you one of the trading opportunity which came on that particular day. Let me continue the auction. See that letter A, B, C, D, it started balancing. More and more it was going sideways. So at that point, I was seeing only one thing over here. Either you see that the activity was getting widened over here, 4 times here and 4 times over here. So 4 times here and 4 times over here. This is where more and more activity was happening. So every day the activity keeps on. At this point of time, I would like to say something here. So the letter F period, what it happens is that it went to break on the early morning high. This is the morning high, early morning high, early morning high, and this is the morning low, first 1 hour high or first 1 hour low. You see that letter F went on breaking the day high. Today's high has been broken. A fresh high is established at letter F period, but still this F period also failed to take out the what? Previous day high. So we learned in the price discovery process. What we learned? What we learned is that the buyers keep on buying until they stop. Once they stop, right, the sellers will take control in the market. That's what, it's one of the places where the sellers prefer to top out. So that particular day, still the price is trading inside the range, and most likely more and more activities started happening around this level. This is one of the places where you can initiate a short. Because these are the days controlled by the traders. When activity is controlled by the traders, what happens here is that price keep on auction back and forth. So they like to accumulate more. That is how the short-term traders, they like to accumulate more. When they are trying to accumulate more, again and again, price will come back to the center. So this point, either this point or this point, they will try to come back. Because these particular days are mostly controlled by the traders. You can easily understand from the volume, or you can understand from the price structure. This is the repeated structure what Peter TradeZilla was talking about. So this is the price discovery process. Price is trying to find buyers and sellers, where more buyers and more sellers are willing to come and trade at that particular level. So you can see I'm seeing 2 levels over here where the price was touching 4 times over here. Maybe I'm thinking at this point of time, my thinking is that again and again price will come back to the same levels. The levels around 9,000 levels are probably around 8940 levels. So let me continue the auction here. So that there was some breakout failure. Day high broken and immediately got back in. Still you see that at this point of time, I was even seeing 4 activity over here also. So 4 activity over here, but now it's getting 5 activity over here. You see the activity now. If I rephrase the activity, 4 activity here, 5 letters here, A, C, D, E, G, and 4 letters over here. So most likely this could be the place where more and more traders might be interested on that particular day. Now this is what a price discovery process is all about. So let me run the auction here. You'll come to know that. See that the activity was again and again repeatedly, price was coming and touching that particular level. Now it is 6 times now. So it's now 6 times. Very interesting, right? So this is what this kind of activity never surprises. You can find this pattern very repeatedly. Now that's the fair price for the day. That's what we say, like the price is coming to an equilibrium. And now here it becomes 7 times here. You see that price keeps on auctioning back and forth. Now we know that these kind of auctions are totally controlled by traders, highly controlled activity, because when investors are coming, right, they don't trade in this kind of bands. Mostly traders, they love to trade in this band. And now we can see that the activity was almost 9 times over here. If you count the letters, so let me pause the video here. If you count the number of letters on that particular day, how many letters you're able to count? Total how many letters? How many times the price, that particular price has been touched at this point? Can you count? Are you able to post here? So how many TPOs? How many TPOs over here? How many TPOs? You can just type in the comment section. I mean the Q&A section. If I try to count, let me count here. A, C, D, E, that is 4. And H, I, J, K, L, M, that is 6. So total 10 TPOs. 10 times the particular price has been touched. This is a repeated pattern what Peter TradeZilla was talking about. Every day, this kind of auction was happening. So even if you see the previous day also, almost 9 to 10 times the price was coming and touching over here. This is previous day's activity, right? That means This is Thursday's activity. Friday is a holiday, and this is Monday's activity. That is yesterday's price action. So 10 times price is trying to find a fair price. So that means this particular day also controlled by traders. And this particular day also controlled by traders. So by reading the profile structure, it will not give you buy or sell, but it will tell you what traders are trying to do. It will tell you how the price discovery is happening in the markets. So what Peter says here is that this is the fair price, where more buyers and sellers are. You can see that more time price is spending. That means more buying and selling transaction is happening between the buyers and sellers. That is how probably the traders, big traders, might be doing some activity. These are big traders are doing some activity. Maybe they might be accumulating or distributing. So later as of now, we're not going to talk about whether they are going to accumulate or distribute. But at this point of time, we can only understand that these are the places where traders are accumulating or traders are distributing. When I say traders, I'm not talking about small traders. I'm talking about big traders who are playing this market like a wholesale traders, something like that. All right. Sounds fair? You're able to understand? If you're able to understand, you can just type understand so that I can understand that we are in sync. All right, great. So thanks Pramod, thanks Kishore, KV Rao. All right, great. So now what is the point of using this? How I can able to manage these things? So this is what is the primary question of every beginner who is very new to market profile is that how it's going to help me to trade at the open? How it is going to help me to take a trading decisions? So definitely, if you take any business, we need to know whom we are competing with. So think about an cricket match or any other sports. Do you think the international player who is coming and playing, they doesn't know the opponent's strength? They do, right? You take let's take Vishwanath Anand. Probably you know that he's a popular chess player. Do you think he don't know the mentality of the opponents? The same thing is what market profile teach you. The market profile teaches you what the opponents you're doing. Except you, everyone is your opponent. Even me, I'm your opponent. So market profile teaches you what the opponent traders are trying to do in the markets, what kind of opponents they are. They belong to what category? Are they intraday traders? Are they intraday traders? Are they scalpers? Are they probably big traders like short-term traders? Are they long-term traders? So basically, if you see the most of the Peter Stadelmeier book, he classified traders into only two categories. One is short-term, and another one is long-term. So basically, this is how long-term he used to call as OTF, other time frame players. So basically, that's what Peter Stadelmeier called. But now, mostly in modern principles of market profile, especially mostly from the takeaways of Jim Dalton work. So he had classified traders into even more finer categories. He categorized traders into scalpers. He categorized traders into intraday traders. He categorized traders into short-term, like wholesale traders, and he categorized traders into intermediate. He even categorized traders into long-term. So this is a kind of brief classification right now, which is available in the modern principles. Old principle is all about how the short-term traders are doing. The short-term, maybe it includes mostly traders. Short-term means traders. It can be a scalper, it can be intraday player, it can be a short-term player. Whereas long-term player means maybe who carry for their position for more than a month. They are considered as a long-term. Now it's slightly different. So now short-term means it belongs to trading money. Mostly these are the guys who are mostly traders. And the other category, intermediate and long-term, are mostly from the investing community. So if you see the last Friday's activity, I mean probably we can take the Wednesday's activity. The Wednesday activity was something really big. So I have one more video to show you. Probably let's see one more video activity. That's Wednesday's activity, I guess. Very interesting stuff that we can learn from Wednesday's activity. So this is Wednesday's activity. So if we see the Wednesday's activity, that is 8th April activity, something different is happening. You see that? So what is so different is that, let me pass the video here. So time is approximately 9:55. Price opened over here. Price opened, in fact, it opened minus 150 points, approximately minus 150 points from the previous day close. You see the hash symbol over here? That is the previous day close. Previous day close. From the previous day close, it opened minus 150 points. It went couple of ticks. It went to the single print. This is a zone which is called as a single print zone, where usually it is act like a kind of a support zone. It took support and it started rallying up. You see the rally? The rally was so impulsive. You see, it's so impulsive. And what do you think? Who is controlling this kind of markets? These kind of markets, who controls? Somebody was keep on buying. So at least the last Monday's activity, somebody was keep on selling, but now somebody was keep on buying. They keep on buying and they keep on buying. Who does this? Who does this kind of price action? Do you think traders or do you think investors? Who does this kind of activity? You can type it out in the Q&A section. So somebody was saying short covering, buyers, scalpers, traders, OTF. So we know only one thing. We know one thing. Somebody, this is not only done by intraday traders alone. Maybe intraday traders might be present. They might be also buying. Intraday traders also buying this particular day. Intraday might be buying. So, but they're not moving the markets. Who is moving the market? Is that somebody other than intraday? Somebody was keep on short covering. Some shorts are getting covered. Short covering is happening. So probably some people who got stuck in the shorts. Think about that. This particular day, it was a very big rally day. Some people, they might fail to cover their shorts. The people who fail to cover their shorts, they might having a huge positions in the markets. They might have a huge positions in the markets. And that guy is kind of a big trader. So he thought like when there is a minus 150 point, he sees an opportunity to cover his positions. So that is why the prices keep on going up. Or maybe some people who keeps on buying means some traders keep on accumulating. Either only one thing can happen, only big traders. It cannot be done by small traders. These kind of price action. You see that particular time was around 9:55. Almost how many points? 870. It's a price move from 8,700 to almost 9,000 levels. That is 300 points of price action. It happened just in a matter of how many minutes? Less than 45 minutes. Less than 45 minutes. 300 points of price action. Right. So these days it's getting very casually. It's happening. But this kind of short covering, this is more of a short covering rally. Or if you check the open interest, you will get to know that what's happened on that day, whether it's an accumulation or price has been closed, more people are closing their positions. So what I'm thinking here is that it's most likely done by the traders who got stuck. So somebody got stuck. So they are, when the price opens gap down, they are seeing it as an opportunity to close their positions. Or maybe sometimes intraday traders also on board. These kind of places, not only struck shorts are being there, it also some struck shorts. Shorts got trapped. So maybe some trapped shorts are covering. Trapped shorts are covering. Probably along with that, some intraday players also see this as price action because there are a lot many traders, they trade the price. So some intraday traders also, they trade the price. So they see the price keeps on moving up and it's also breaking the previous day high and they keep on buying. So that's most likely price-based traders also will be there in this markets. It's very elongated. In fact, and there are this kind of price move, right? It will stop at some visual reference level. Most likely, here is the high. This is the high from RBI policy day. One of the day RBI does some surprise rate cut, policy day. So you'll be able to see that the day its price is gunning out for. Now think about this price action. It's so different from there is no price discovery at all. You can see that hardly 2 TPOs over here, 2 TPOs over here, right? Only 2 times the price got traded. But still, there is no price rotation at all. Otherwise, it is completely different from the last Monday's activity. This Wednesday's activity is completely different from the last Monday's activity. I mean, yesterday's activity was slow sideways. This is not sideways. This kind of a clear trend is emerging. In fact, price broke on the previous day high also. In fact, the letter C also, you see that letter C also not bending down. It's also like only 2 times. Of course, this is what we can say, like, let me pass the session here. This is what we say, like, absolutely no price discovery is going on. But that is not the nature of the market. The nature of the market is to find a fair price action. If it's a fair price action, right? But I know what is happening on that day is that particular day, previous day high has been broken. And multi-day high, see the multi-day high, the RBI announcement day high, that also has been broken. Now these kind of markets, whom do you think they might be trading in these kind of markets? Who does this kind of activities that, as I said, some struck shorts, some trapped shorts would have been covered. At the same time, more traders will be chasing this price. Those traders are seeing a fast profits. So there is a fast profit over here. You see that letter A, B, C, all are getting elongated. That means the traders who were chased since the morning are sitting at a fast profits. Who think about the traders who entered here, along with the guys who are covering their old positions. So short covering is happening. Short covering of mostly trapped shorts. They're closing their positions. Trapped shorts. At the same time, think about the traders who bought here, who bought here, who bought here. If these guys are traders, what happened? They might be sitting at a huge profit, right? Think about the traders who bought here. They are also sitting at a huge, almost another 200 points profit, another 200 points profit here. Who bought here, they might be sitting at a 300 points profit. So all are traders. If all are traders, what will happen? And who will come to trade when the multi-day breakout is happening? When the multi-day breakout is happening, many breakout traders will come and trade. So this is where more breakout traders will come and trade. Breakout traders. So if more and more traders are competing, right, and the markets are breaking multi-day high, where it is again attracting more breakout traders. Usually what is happening here is that the entire day is most likely driven by traders along with the short covering. In fact, short covering was there. Some big traders are covering their shorts. Along with them, more and more traders are coming and buying here. So many breakout traders would have been bought here. So here also breakout traders. Here also breakout traders, because price was breaking multi-day. Initially it broken previous day high only. There breakout traders would have been formed. Many traders in the markets are breakout traders, if you are not sure about that, right? So traders, they love breakouts, and traders, they trade breakouts. And that makes the difficult game, because if breakout trading is so successful, right, everyone should be making money here. And that is not happening. So a lot of breakout traders are in this markets. In fact, when a lot of breakout traders are there, and if everyone is a trader, let's say that, I think in this room, in today's session, we are closely having 482 members. Assume that everyone is a trader. Everyone bought right from the morning. We have keep on buying Nifty. Almost all the 482 members bought Nifty. Then what next? What do you think? What will next happen? And everyone is a trader. Everyone is a trader. Some people bought here. Some people bought here. Let's say some 20 people bought here. Some 40 people bought here. And as the price keeps on moving up, it keeps on attracting more and more people, because price keeps on breaking out. Many people see the breakout. You're not the only one going to see the breakout. Almost every trader sees the breakout. So some 100 people will come and buy here, and some 200 people will come and buy here, and remainder of the people, some 80 people will come and buy here. So everyone was chasing the price. Then what next? We are traders. Fundamentally, we are traders. Then what will happen? Traders will book profits. The traders who are sitting over here, they might be sitting at a deep profits. The traders who are sitting over here, they also are sitting up a reasonable profits. So these guys will try to close their positions. So that's what happens over here. The nature of the market is to do what? Find the price discovery has to happen. Here the price discovery is not happening. Prices keep on moving one way. As we learned, price keeps on moving one way until the buyers keep buying. Let's say all the 480 people bought, all of them are intraday traders. Every intraday traders bought. Now what next? There are no more buyers, no more intraday buyers for the day. Every buyers bought. So what will happen? I'll show you what is there on the slides. I thought of showing you on the slides. We talked about this, right? So what we talked about that, when the market cannot facilitate the trade on the upside, means when the buyers are completely occupied, completely, you know that, right? Intraday players, they have a limited supply of money. They cannot keep on buying forever. They are not institutions. At least institutions, every day they come, FIs will be doing some activity, DIs will be doing some activity. But intraday traders, they have a limited supply of money. Probably they'll be coming up with some 10 lakhs. Some people will come with 1 crore. Some people will come with 50,000. Some people come with 1 lakh, 2 lakhs. But they have a limited supply of money. They are not institutional investors. So once every intraday traders are full in that particular day, what will happen is that generally market started testing on the downside. And moreover, that is where most of the breakout traders, they get themselves into a trap. So if you're aware about the situation, what is happening inside the markets, at least you know that some profit booking can happen. In that case, maybe price will come back. You see that only 2 times over here and 2 times over here. So maybe this could become 3 times, or what if this becomes 3 times over here? Price can come and fall over here. Either it might be touching this one, or price could be touching this one. That opportunity is arriving there. Very interesting, right? So let me show you how the price discovery happens on that particular day. So it keeps on went up. It made the top around 9150. You see that price started dropping down. And that's how the traders started booking their profits. Letter D started. It started coming down. And you see that now it's 3 times over here. As we discussed, it is getting 3 times over, 4 times now. Letter F also started. And more traders are booking profits because too many traders entered on that day. See that even the traders are keep on going down. So why this reversal all of a sudden it happened? Now that is how the price discovery happens in the markets. Price started widening. Now you can see that it's getting 1, 2, 3, 4, 5 times over here. Very interesting, right? This is the pattern what Peter Stadelmayer found it very interesting. Of course, those days it's not electronic days. He went through the floor. He's seen physically from the floor what the traders are trying to do, what small traders are doing, what big traders are doing. Because on the floor, everyone can see everyone. All the buyers can see what the sellers are doing. The big traders can see what small traders are doing, and small traders can see what the big traders are trying to do in the markets. Almost at this point of time, almost 6 TPOs over here. And then at some point of time, it even went to 7, I guess. They went on testing the day low. So until then, what was happening? The sellers, the traders bought. Initially, all the traders they bought, and ideally all the traders they sold. That's it. Just traders bought and traders sold that particular day. This particular day also not some serious money. Initially, some serious money covered their shorts. Initially, that particular day, what happened? Some serious money covered their shorts, but later on, along with them, who competed? More and more traders competed, right? So more and more this particular day, traders was keep on buying. They're chasing the price. So lot many traders, you know that traders chase the price. So traders, breakout traders are coming in, breakout traders here, breakout traders over here. Lot of traders in this setup. Too many traders are sitting in a fast profit. If fast profit happens, what will you do? If you're seeing a 300 points, just like that, markets are showing you 300 points, 400 points, what do you do? You will simply book profits. Do you think you will go for 700 points, 1000 points? Because we are traders, we are not investors. Why I should go for 1000 points? If somebody is still looking for 1000 points, then probably they are new to the markets. If you are a regular trader and if you are seeing 100 points, even some people will try to book for 100 points, 200 points, it's also a big money. But that particular day it was showing a 300 points profit. So do you think fast profits book, without there are no news also. There is no fundamental change also on that particular day. Just like that, markets are moving because the global markets recovered. The global markets are trading positive. So now think about that. So again, price went to the support, and again, some smart money, they started pushing it from there, exactly from the single prints. So market profile gives you clearly what is happening inside the markets and who is doing what and why they are doing. You can be able to clearly able to anticipate. If you know what is happening right now in the markets, you know what will happen next. So when I see this pattern, letter A and letter B and letter C, I said like, this is too much of traders who are buying and sitting at a fast profit. I think most likely they are going to reverse. And later on, some one-time framing started happening. They keep on price, keep on going down like this. I've even said price can go and test day low also, because I'm seeing more and more traders are closing their positions. And there is a certain pattern is coming there that's most likely getting more and more stronger. So they might even go and test the day low. And then I said like, even when the price goes down, I said like, even it is risky to go on short here. Risky to take fresh shots. Even if you want to carry forward your fresh shots, it's going to be risky. So you should stay away from taking fresh shots. That was my comment on that day. So these kind of comments you should be able to understand. Once you understand, if you give more understanding about the price discovery process, if you understand how this price discovery happens, how the buyers and sellers collide, and how they interact, and how they create a fair value. You can see that particular day, here is where the fair value got created. How many letters on that day? AHIJKLM, almost 7 times price got traded over here. Almost you can see here it is 3 times over here, 4 times over here, and 7 times over here. You see the tails? Tails are just 1 time. Tails, very few times price is getting spent over there. Then at the center, it's getting more and more. So the price, many traders are agreeing to trade at this price. Not much, but at least only 7 times. But if you see the last 2 days, almost 9 times or 10 times is what the price got traded. This is something different. This is a completely different way of buyers and sellers interaction on 8th of April, whereas 9th and 10th are completely different. So let me go and show you in the market profile charts. If you see from the market profile charts, let me show you the recent market profile charts. So of course, it was I'm using a TPO size of 5, which generally I don't use it. I only for display purpose, only for explaining purpose, I'm using an TPO size of 5. Otherwise, in my real life trading, I use a TPO size of 1. Means every 1 point I'll be using a letter A. So every 1 point moment I'll be using the letters. So which if I'm gonna put that, you cannot see the letters. You'll be only able to see the blocks. So in this example, you can see that the price is distribution. You'll be able to see that bell curve distribution. This bell curve distribution is what Peter Stadelmeier says as a repeated pattern. Now, do you think is the market is random? Is the market is random? After seeing this, do you think the market is so random? So random? These are random moves? They are not. Markets are not random moves. It looks like it's random moves, but the traders are accumulating at particular price level, which you can easily visualize using the tools like market profile. You can understand. What you can do is that you can understand what traders are doing, where they are accumulating a distribution, where they are accumulating or distributing. Can I know that? Yeah, of course you know that. So the previous example, we've seen that letter A keeps on moving up, like letter A, letter B, letter C. So that's more of a short covering rally. Probably some traders are closing their positions. And here we've seen that from the letter open, it started dropping. So here, right, this particular day. So price opens here, it started dropping down, straight drop. So you can easily understand that probably the traders are closing their positions. Some one big trader or 2 big traders are continuously keep on closing his positions, some of his big positions. So he might be closing his position. Or sometimes they will even initiate fresh trades also like that. But most likely when they are accumulating, they will accumulate like this. They won't accumulate in a fair price. without disturbing the markets. Without disturbing the markets, mostly that's how the wholesale traders behave. The wholesale traders. Think about that. If you are a wholesale trader, do you think you will keep on buying like this? Do you think you will buy like this? No, of course not. If I'm a trader, let's say if I'm a wholesale trader, think about it, I'm still a trader. If tomorrow price opens here, what will I do? Let's say last 2 days I bought. Last 2 days, I'm a wholesale trader, I bought. What will happen if price opens tomorrow at 950? So where was the SGX Nifty trading right now? SGX Nifty, if you see the SGX Nifty is currently trading around where? So let me go and pull out the SGX Nifty charts. So maybe we can see SGX Nifty at 2 different places. I like to see at livesgxnifty.com. So where you can see the SGX Nifty. Currently it is around SGX Nifty has 2 sessions, right? So 9243, it is trading around 9243. Of course, if you are a trading view user and if you like to see the charts, so here is a symbol IN1 with an exclamatory mark. You can see that right now it is trading around 9236. Assume that, just an hypothetical assumption, not necessarily that has to be true. Assume that last 2 days, I'm a trader, I bought. I'm still a wholesale trader. Think about that, I'm still a wholesale trader. So maybe assume that, think about yourself. You bought 1000 lots here, and again another day you bought 1000 lots here. You bought. Now this is a question I'm putting to you. If you are a trader, if you are a wholesale trader, you bought 1000 lots here. Again the next day also. So this is last week Thursday, you bought 1000 lots, and this week you bought. Think about that. You bought some another 1000 lots on Monday trading session. Now, what you will do as a wholesale trader when the price opens gap up around 9250, assume that 9250 plus price is opening. What do you do? You will go and accumulate more, or what do you do? What you will try to do? Just think about what you will do. How do you feel about the market? That's what I'm asking. So, not whether it's right or not, it doesn't matter. I just want you book some profits. At least some partial profits you will book, right? Why? Because you are a trader. Because you are a trader, you are not an investor. You are not going to hold the positions for another 2000 points or 5000 points. Or does a trader trade like that? Very few traders, they trade like that. But majority of the traders, think about that. If you're a wholesale trader, if you're making some decent profits, don't you think at least you will try to book at least some 500 lots, at least some 25% of your positions you will try to book here, at least if you're a trader. That is what will happen. If price opens with a big gap up, immediately should I have to go and trade? No, some profit. The people, if last 2 days somebody bought here, if some small traders they bought here, and price opens with a gap up, I'm just giving a hypothetical example, or let's say even if it opens around 9200, it will try to go up, but it will start selling. It will start selling and they'll try to close the gap because they'll keep on selling. They will keep on booking their profits. If you're seeing that keep on booking profit, that means the guys who bought here are trying to come for a selling. They're trying to book profits. That's why this happens. If you're seeing on Monday, I'm just giving a hypothetical example. Not necessarily it has to be true. But if the price opens gap up over here, let's say it opens around 9215, just give an example here, and it started driving up, that means what? If prices started moving up, what could have been happening here? What is happening over here? Last 2 days, some accumulation, let's say last 2 days, some buyers accumulated, but still today also price keep on moving up. The A period moving up, B is also moving up, C is also moving up. What does that mean? Higher prices attracting more buyers. More buyers are coming and competing. That's it, right? So that means maybe some big players are coming and buying, and most likely small traders also buying, big players also buying. That's why they don't want to close the gap. Market is so bullish, so maybe they want to buy more. Probably markets are looking for higher prices. So in that case, you should not short the markets at all. If you're seeing that price started opening gap up and keeps on rallying, instead price opens here, it went a little bit up, not much of a buyers, what will happen? It will start coming down, right? So some traders who might be sitting at the buying here, they might be started booking profits. So you have a fair idea that this is profit booking. Probably you have to, if you want to buy, you have to wait, let the price settle down. We don't know how much far down they might be keep on going on. They might even go down like this also. Who knows? So part of the game, it's all about thinking how the traders are moving the markets and why they should move the markets and why they are moving in a certain way. It explains mostly the trader's behavior. And that is what we call as a price discovery process. And that is where you learn that once you know this process, trading around the open will be very much easier. At least you know what kind of confidence is going on, who is doing what, whether they keep on accumulating or distributing. By knowing that, you know that whether it's markets are at the overbought level or markets are at oversold levels. You can predict, if you know what is happening in the markets, you can predict what will happen next. All right. So think about, I guess we had seen some 2 examples. Now it's more of a little bit of a theoretical session, what we had seen so far. So price discovery is a process by which market prices are determined largely by interaction between the buyers and sellers. So what is the primary goal? The primary goal is to find an equilibrium point. And price discovery is what set the sellers are willing to accept, whether the sellers are willing to accept that particular price. If they're not accepting that price, if the sellers are not accepting that price, they will simply reject it. The sellers are rejecting that particular price, what will happen? If the sellers are not interested, what will happen? If the sellers are no more interested, buyers will take control and price will start moving up. All right, so the price discovery is concerned finding the equilibrium point. So that's what we learned. Both the examples, 2 live examples I showed, the recent examples. In all the examples, what the price was trying to do, the buyers and sellers are trying to find the equilibrium price, where more times the activity was happening. That is a place they like to accumulate. That is a place where the bigger traders or bigger institutions also at times, even if there are any bigger institutions also, they would like to accumulate or they like to distribute. So of course, we know that price discovery is driven by many factors. One among them is supply and demand. At times it can be done by fear and greed also, and it can be some market mechanisms or something like that. So using the price discovery process, we can say that now the price is getting overbought or now the price is getting oversold, because fundamentally it explains what traders are doing in the markets. All right, it helps you to assess what the buyers and sellers, whether the buyers is dominating in the markets or sellers are dominating in these markets. You can easily understand by the way how the prices keep on moving up and down and up and down. The price keeps on moving up and down, right? That's what we had seen in both the cases. That's what we call as a 2-way auction process. So the price discovery process itself largely governed by the 2-way auction process. All right. So think about the people who are willing to trade at the open. There are many traders. If you see their patterns, they want to trade at the open. The market opens, they are the first guy to come and trade. So many times people will be seeing that the moment market hits 9:15, they will be at some point of at least one trade they will be taking it, whether long or short. They would have come up with a predetermined mindset. Today market's going to open gap up, I'm going to buy. Today market's going to open gap down, I'm going to sell. So they will be coming up with predetermined mindset. They'll be coming and buying very close to the open. They are very anxious traders. They'll be feeling that anxiety. They'll be like, when the market opens, I need to trade something. That is the kind of mindset many traders they have. Mostly traders have that kind of anxiousness. So they like to trade mostly very close to the open. So within first 5 minutes or within first 10 minutes, and some traders they like to trade once 15 minutes is over, maybe market might be settling down. But you see that most of the times, markets at the open, not every time, but most of the time, market does chopping, especially when it is opening inside the range. It can be chopping out the traders. That's what it happened in the last 2 days. Last 2 days, it's not breaking out. Whereas last Wednesday, it was breaking out. But last 2 days, if you see that, markets are not breaking out. Instead, it was chopping the traders. If you're a trader out there, there is a higher odds that you might get chopped out. Now think about the day, the last 2 days. So last 2 days, I can split the profile also here. I can see like how the intraday activity happens like that. So you can see what we are seeing is most likely chops, most likely balancing. This is the kind of markets, if you bought here, probably it's keep on chopping, went up and keep on chopping. That's what it happens over here also. It went up, it went down, it went up, it went down, it went up. So what 2 days, last 2 days was done was that it was doing chopping. It's kind of a one bigger chopper machine, keeps on chopping on both the sides within a 200-point band. That's what it had done. That's how the big traders, they accumulate, or that's how the big traders distribute. So you need to know this mechanism. If you want to learn to trade this better, you need to trade, you have to understand this mechanism. Understanding the mechanism helps traders, especially to know whether the price is expensive or cheaper. So there is a very simple tool over here. It's called value area. Anything above this is cheap, expensive, and anything below this is cheaper. So if you're seeing that more and more activity and price moves up, most likely expensive, it can come back to the, again, to the fair price where more traders are willing to trade, especially the big traders. So if you know that that particular day is governed by big traders, then you know that price can repeatedly come back to the center again, which usually market does via two-way auction process. All right. So we are talking about anxious traders here, especially the traders who like to trade around the open. So majority of the traders, I'm talking about majority of the traders, not the traders who like to make money every time, but I'm talking about most of the traders who are anxious traders. They see the price and they onboard into the price most of the time. So within an hour, they would have been done at least 2 to 3 trades. Within 1 hour, if you see that at least 3-4 trades, they would have been done within the first 1 hour itself. They would be going and buying Canara Bank. They will be going and buying, shorting S Bank. So at least they'll be doing some like that. They'll be keep on doing some 3-4 trades. At least they would have been prepared. Many traders would have been prepared to buy at the open. They mostly focus on quantity. If the market opens, I want to do at least 3-4 trades. I want to win this. So that is the mindset they'll be coming up with. Of course, I can tell you that those kind of places, they have very little learning about the markets. If you have a if you have a very reasonable understanding about the markets, not every day is open, you should be going and trading unless the prices keep on breaking out the key reference levels, right? Unless if you're looking for a certain targets, you need to know what is happening inside the market. You cannot be an anxious trader. If you're an anxious trader, you are focusing more on quantity of the trades rather than the quality of the trades. If you're a trader, if you are focusing on the quality of the traders, if you're focusing on quality of trades, then you need to know why you are taking that particular trade. Otherwise, you are simply taking the trade because you're seeing some breakouts. Any kid can do that. Any kid can see a breakout, right? It's not you are seeing the breakouts. Almost everyone sees the same movie. Right from 9:15 to 3:30, you see head and shoulders, I also see head and shoulders. You see divergence, I also see divergence. You see an breakout pattern, I also see a breakout pattern. You see a triangle pattern, I also see a triangle pattern. So now, what is the difference between you and me, right? So if you want to cultivate the difference, then you need to know what is happening inside the markets. Very few people are interested in knowing what is happening inside the markets. And that is what market profile teaches here. So around the market open, many people have this kind of mindset. That's what we call as a feelings, what I feel about the market today. So trading bias, some people have a trading bias based upon the recent economic numbers. So IMF is saying that economy will go down. So I'm going to short this markets. That's how some people will react. And some people will say like yesterday trend was sideways. So today also the sideways will continue. That is some people's mindset. Some people will say like tomorrow there is going to be a breakout and I am going to trade the breakout. So that's a feel, right? It's how I feel about the markets. Tomorrow there's going to be a big gap of 250 points. Oh my God, that's a big breakout. Last 3 days, high is going to get broken out. So I'm going to buy these markets. And people have different feelings. Like so today our Prime Minister said like the lockdown got extended. So some people will say like it's a public information, and everybody knows that it's a public information. So definitely market will digest the information and price will go up. So they will come and buy. People have a different feelings. Every people, if you ask them, they will have a different feelings. Some people trade the event, some people trade the outcomes of the news, whether it's a positive, they go long, or if it is negative, they go short. Right? Or they see the breakout and they trade the breakout. Many traders in the markets, they do different things. But fundamentally, we can understand them, what they are trying to do, the way they are doing, we can able to understand via profile, not using indicators. Indicators hardly help what traders are doing. Indicators hardly help what big traders are doing, what intraday traders are doing. None of the indicators, to my knowledge, it says what intraday traders are doing, what scalpers are doing at that minute level. I feel like market profile does a lot of activity on that. So for an intraday traders and scalpers, we have a different set of behaviors, and for an long-term investors, we have a different set of behaviors. And moreover, if it's a short covering, we have a different set of behavior. If it's a slow addition or a slow distribution, we have a different set of behavior, which can be easily explained via market profile. And during live markets, you'll be able to interpret. It's more of an interpretation than it's more of a buy and sell signals. Especially it suits. I tried all these indicators, but I want to know more about what the market is trying to say to me. I just want to read the pulse of the markets. So thereby I want to make my decisions. Should I have to go long or should I have to go short? Where I should see a long opportunity, where I should see a short opportunity. All these are based upon the interpretation of what the market itself doing. Some people will simply buy the price breakout at the open. That's what many people will do. So tomorrow, if price opens gap up, many traders will be anticipating that, oh, market will go to 9,500, market will go to 10,000 anyways. Just like that, they will go and buy without knowing what the market is going to do, right? You see, if you are a patient trader, at least you want to listen to the market observation. You want to know whether the price, tomorrow's opening price is going to accepted by the buyers or it is going to rejected by the buyers. Because it's going to be a tomorrow, if it's going to be a 250 points gap up, right? We need to know as a trader whether the price is going to get accepted or rejected. If it is rejected, what will happen? If it is going to rejected tomorrow, what will happen? Price opens gap up and traders started booking profits, what will happen? Price will start dropping, right? Price opens here. If more buyers are not there, like you see that 9250, and that is already we are in a lockdown. So means it's the buyers who bought here, the big buyers who bought here, they're getting a good exit over here. They will start booking profits. In that case, how I should react? If this is not happening, let's say this higher prices are coming, maybe more anticipation that governments might be interested in giving more subsidies, or probably they might be pumping, they might be boosting some economy. When such kind of hopes are happening in the markets, these levels may not be getting accepted at all. So price will, again, this higher price will attract more and more buyers. Price might not be willing to come down. In that case, I should not short the markets at all. So I have a fair idea. By looking into the markets, I have a fair idea what I should do based upon what the market itself doing. I know that when the price started opening up and it started keep on moving up, I know that these are not good place to look for shorting. Maybe I should go on getting into the long mode. There's no point of shorting this market, because if they are buyers here, and if these guys are big traders, and they are not booking profits, probably these guys are anticipating. They know the market better, right? They are big traders. So they are not the markets for last 1 year or 2 years. Probably they are doing business. If somebody is coming up with 100 crores of money, or some 50 crores of money, or 25 crores of money, do you think they want to do some simple gambling? So they want to do it like a business, like a wholesale traders. They buy, they accumulate, and they will distribute. 5 days they will accumulate, and 2 days they will distribute. Or they will accumulate, they will distribute. They will accumulate, they will distribute. They will accumulate more, and they will distribute. That is how they will keep on doing. That's how they will keep on playing in the markets, if they are traders, right? So investors do this on a larger scale, but traders, they do it on their own small scale. Like the big traders are like small scale industries, and the long-term investors are like large scale industries. So if you are a trader out there, if you understand these markets, what last 2 days or last couple of days, what they had done, what the big traders they had done, at least you can anticipate based upon the price action. You know that, let's say the price opens here tomorrow. If the price opens here and started dropping, right? Even you can think of going short also. Again, going short for probably again towards failed auction, because it's still not cleared. Maybe you can still go towards a short also. So you can come up with a calm mindset as a trader. What you have to do is that you have to, when you want to trade at the open, not every time the opening is going to be an opportunity. But If you're seeing that the big traders are shorting this closing their longs, market will tend to fall because they're closing their old longs. So in that case, what kind of mindset you have to come up with? You have to come up with, is the market is breaking any major reference levels? Can we initiate a trade at this level? At the opening itself, price breaking 3-day high. So price is breaking a major level. Okay. So can I go and initiate a trade at this level? Why I should initiate a trade? The why is the question predominantly. It should be bugging you as a trader. Why? Because last 2 days traders bought. Maybe they are traders. I know that. Maybe they might be booking profit. So I can, when the price opens gap up and it started coming down, it's trying to close the gap. So I can go and short the markets also. Probably I can part of their they're trying to close their shorts. So let me try to benefit from that move. So what the short-term traders are doing, we need to understand this, whether they are in a kind of an overbought scenario. That's what we say, like inventory getting long to too long, or inventory getting short to too short. They are in some sort of an oversold situation. So we can clearly understand from the profile structure. So every profile structure has a meaning associated with that. So what kind of confidence it is? So we talked about no confidence, right? No confidence, how you should behave. In a high confidence market, how I should behave. In a low confidence market, how you should behave. So there are different market confidence are there. How as a trader they feel. In a high confidence market, how it looks like. A low confidence market, how it looks like. If the markets are showing high confidence, what I should do. So these are the various questions you have to ask yourself around the open. And that will help you to trade. Should I have to trade immediately? So that will help you to guide what? All these information over here will help you to trade. Should I have to wait? Should I have to wait? At the open, should I have to wait for some more time? Maybe at times when the no confidence is happening, right? So you have to learn to wait because a lot of choppiness can happen. So you may get chopped out. So if you want clarity, you have to learn to wait. You have to observe more. You need more data points. You need more data points about the markets. If it is showing at the high confidence at the opening itself, I'm sorry. Maybe if it is high confidence, maybe you can go and trade immediately. You need to think about, should I have to trade immediately or not? Immediately. If it is no confidence, probably you have to learn to wait. Or maybe you can scalp. You can go and scalp the markets because most likely it's going to be a choppy markets. You know how to trade the choppy markets. Mostly it's good markets for scalping. And no low confidence, then in that case, should I have to wait or should I have to trade? That's most likely based upon what level it is getting accepted or rejected. Based upon that, our opening trade will be. And this comes with practice. This most likely comes with practice, and you need a lot of observation about the markets. More you're going to observe, more you're going to understand about these markets. All right. So these are the data points I repeatedly watch in any kind of markets around the open. So these are the things I'll be preparing before the open. What is the trading inventory is? Is it trading what previous day or last 4 or 5 days? What the short-term traders had done? What the big traders had done? Or where the investors had entered? Whether they created any major support or major resistance level? If it is so, then how I should handle? Should I have to look for small targets, or should I have to look for bigger targets? And what the trend itself doing? If you see the trend, so as a trader, what you should aware about is that you should aware about when you're coming to the market open, you should totally aware about the recent trends. So what the monthly had done, what the weekly had done, what the daily had done. So this will give you a clear idea, clear picture how you should handle today's data point. Today's open, how you can handle it. So think about that. I'm going to go to the Ami broker charts. So let's see what the monthly charts are doing. So monthly charts are still in a downtrend. Very interestingly, what is so different about the monthly chart is that still it is in a downtrend. Clearly, larger picture is still down. Nothing has been changed. You see that the highs was continuously going down. It's keep on making lower highs. That's what is happening in the larger time frame. Something like this, it cannot be done by traders alone. Some big investors had sold. Big investors. I'm not talking about big traders. I'm talking about big investors. They sold. Who sold this? FI or DI? Who sold this? What do you think? Probably you might be seeing that numbers, right? FIDA, almost every trader, almost every investor, they watch these numbers. Who sold these levels? Who are the sellers? Who keep on selling the entire time? It's mostly FIs, right? Probably if you see the numbers, they'll be in continuous sellers right from January, February, March. In fact, February and March, more FIs they sold. So big traders, the FIs are keep on exiting their positions, and DIs keep on buying at every dips. Every dips, you see that every day's number, almost you can see that DIs are buying. So big investors are the one who can cause this move. They are dominating this move. They're not only causing this move, they are dominating this move. They dominated, clearly they dominated. That's the reason we got a big crash. Here, these places, they never dominate. They might be slowly accumulating, or they might be slowly distributing over here. That's what they had done. But here they dominated. Here they dominated. Here they might be doing some stealth mode. They are in stealth mode. They don't show themselves every time. They are not causing those places. They are not causing any big fluctuations in the markets. They might be adding to slowly. Even if you see this uptrend, they might be slowly adding. They might be slowly adding to their positions every day, or they might be slowly reducing their positions every day. They might be mostly operating the market. They don't influence the market all the time. The big traders, they don't influence the market all the time. But here they are influencing, clearly influencing, because just like that, price was going and breaking the 2017 low. Just like that, it is broken. Do you think an investor, intraday trader, or a scalper, or a big trader can go and break like this? And the investors will be watching, and crores and crores of assets will be collapsing in front, just because intraday traders and big traders are pushing the price down. Do you think they'll be keep on watching the price levels? They don't, right? This kind of price action, just like that, it cannot be created by algos. If you see algos also, fundamentally, they are also trading money. They are not investing. Algo never do investment in the markets. Yeah, some fundamental based algo, maybe it might be doing investments. Most of the algos, they do only trades. They cannot create this kind of damage. This kind of damage can be done only by the investing money. Serious investing money is selling. Probably they are closing their positions and they are moving, they're converting everything into dollars. That's what FIs do, or FIs are done, at least so far. So monthly is clearly trending down. Investors are so far they sold. But if you see the weekly, something different is happening. Very differently it's happening. The downtrend stopped. In fact, they started inching up. So that means what? The selling got arrested, and last 4 weeks we've been going up. So means who is controlling this market, these kind of markets? Maybe some investors might be bought, or maybe some big traders would have been bought this. Because last 4 weeks it's keep on going up. Almost we had reached almost 1,500 points from the bottom, 7,500 to 7,500 to 9,150, almost 1,150 points. I mean, 1,650 points, right? 1,650 points in a matter of 1 month. Do you think traders will do that? It cannot be done by traders, right? Some investors, or some big traders, or big investors, some not big traders, but most likely again some big investors are buying this. Big investors, maybe they might be finding as a fair price. This lower price is attracting more investors. More investors. It's attracting more investors. More and more investors are coming and buying here. That's fine. That's why last 4 weeks it's keep on going up. Last 4 weeks it's been keep on going up. But now come to the daily time frame. Daily time frame, something different is going on. If you see the daily time frame also, prices keep on making higher highs. Last 5 trading days. Last 5 trading days, it keeps on making like higher lows. It's keep on, the lows are not breaking previous lows. Today's low is not breaking previous day low, and this day is not breaking previous day low. This day low is not breaking previous day low. Like that, it keep on happening for last 5 days. But despite that, markets are largely trading in a balance. So still markets are trading in the last couple of days. If you see the market structure, markets are still trading in a balance, kind of a sideways price action. You see that? So this is what we call as a sideways market. This kind of markets are most likely governed by big traders. So big traders are there in the markets for last couple of days. They're dominating. Big traders, they started dominating. Big traders, they started dominating here. So most likely, if they will be keep on buying, and they will keep on selling, and they'll be keep on buying, they'll be keep on selling. That's what they primarily do. They try to trade. They love to trade at the edges. Big traders usually love to trade at the edges. They accumulate, they distribute. That's what they do. So if they would have accumulated over here, maybe if there is a gap up, maybe they will try to sell. And if the selling is not happening, maybe a good breakout is happening and prices keep on opening. Maybe we might see some higher prices also. So tomorrow, by looking into the opening, we will get to know what the traders are doing, big traders are doing, what the small traders are doing. We'll get to know, at least we'll have a fair idea based upon where the market is opening. Let's say that tomorrow all this SGX Nifty is going for a toss. Tomorrow price opens here. So means price is still trading in this band. So again, short-term traders might try to, if price started moving against the short-term players. Think about that. You're a trader out there. Let me put you a different opinion over here. All right. So you have a thinking probably. Let's say that you bought 100,000 quantity over here. Assume that you are a wholesale dealer and you bought another 1,000 quantity over here. So last 2 days you've been accumulating here, and now price opens here. It started breaking down. Now what you'll do? Price opens inside the range, but immediately it started moving against you. Now what you'll do? You will buy more or you will close your position. If you're a trader, assume that you're a trader. You're not investor. Think from the trader's mindset. What you'll try to do? Of course, if you're a trader out there, you will close your longs because price started going down. Maybe you think like maybe some big traders might be pushing it down. If big traders are pushing it down, you don't have any choice. You have to either join with them or you don't fight them. If big investors are coming and pushing the market down, you know that you cannot compete. A big trader cannot compete with big investor, right? So basically, these are the sharks in the markets. These guys are small fishes, maybe medium level fishes, but these guys are big sharks. And big sharks are coming and moving the price against them. These guys are traders, so they will close the position. These guys will come and they will close the positions. In that case, what will happen? It will drive the price even further down. So it will give a fair idea about what is happening in the markets. You'll be able to interpret via the price action. You'll be able to interpret via the profile distribution. You'll be able to interpret what these guys are doing in the markets. During the live market, you'll be able to interpret. Even after the market hours also, if you want to interpret, you can still go and interpret what happened on that particular day. So if you want to trade yourself at the market open, you should totally aware about the recent trends. So we know that monthly it's trending down. It's been trending down. And of course, weekly it's been sideways to up. Last 1 week we've been trading in a 2,000 point range, but I mean 1 month, more than a month, we've been trading in a sideways to upside. So sideways to upside. So even daily is also kind of sideways to upside, because last 5 trading days prices keep on inching up, but without breaking the previous bar lows. So in this case, now if the price is going to open, so how the other traders are positioned in the markets, based upon that, what you are expecting, that is what it's primarily important when you want to trade at the open. So you should totally aware about where the price is going to open. So maybe around 8:30 or 9 o'clock, you see the pre-open, or around 8:30, if you're going to see the SGX Nifty, you have a fair idea where the market is likely to open. So whether the market is open inside the previous day's range or outside with like a gap up or a gap down, where the price is going to open, you will get a fair idea. Are there any news event planned in the near term? So we're not going to get influenced by what kind of news is. We're not going to influence about whether the news is totally positive or negative. We are mostly interested after the news, how the price action is. After the news, what kind of traders are coming and competing? Are they smart traders? Are they dumb traders? Are they accumulating? Are they distributing? That is what we are primarily going to be interested. Are there any institutional participation is there? Are there any institutional short covering is there? Which we can easily figure out If you know a little bit of OI, you can easily figure out that. Not a big deal. So you can combine, at times you can combine profile structures and open interest also, and you can understand what is happening inside the markets. All right. So you should totally aware about the market structure. Now I know that last 3 days or last 5 days, how the market structure has been. I know whom I am competing with. So I know if the price opens gap up and started dropping down, I know what to do. I know what, if the price opens gap up and it started rallying up, what I should do. I will be coming up with a plan because I know the market structure. I know what kind of traders I'm competing with. I know whether they are small traders or big traders, where the small traders initiated their positions, where the big traders initiated their positions. And mostly you should come up with a trading attitude. I would say that it's a trading mindset, that not necessarily you have to come and trade at the opening itself. Not every time, because not every time the markets are going to show up the opportunity at the opening itself, unless markets are doing some activity. There are many times, like last Friday or last Thursday, markets are just chopping out. There are many times market chops out around the open. Mostly it chops out around the open and takes the weaker hand traders out of the game most of the time. So you should come up with a mindset. Unless you are seeing an opportunity, you should not come and trade. Let the trade come to you. That is the kind of mindset you have to sit with that, because at times a good trade opportunity will come around 10 o'clock, at times around 1 o'clock, at times it will come around 2:30. Those are the times you have to learn to wait. And sometimes it comes at the opening itself, because market opens. There are many times you might be seeing that open equal to high setup or open equal to low setups. Many traders will like to trade that game. Sometimes it will be a genuine opportunity also, open equal to high and open equal to low kind of setups. So you have to learn to trade at the opening itself, but not every time. So 40% of the time, probably I would say that 70% of the time, you should not trade at the opening at all. Should not trade at open, because not 70% of the time you don't find the best opportunity. No best opportunity at open. No best opportunity at open. But yes, 30% of the time, there are going to be best opportunities at open. Best opportunities around open. So you need to evaluate whether it's a best opportunity trade around the open, and why. That why is a term is very, very important. That why you will be able to learn once you are able to understand what the references I should monitor for the day, what is the trading inventory, what is the opening confidence, many things we talk about there. All right. So it helps the traders basically to understand whether can I trade at the opening at all or not. But majority of the time, it's not a good idea to trade at the open. That's my overall conclusion. But there are times you have to learn to trade at the open. There are very few times market provides opportunity at the opening itself, right? So which you'll be able to calibrate if you know the profile structures, if you know the single prints, if you know what the short-term traders had done, what the other big traders are doing in the markets, or big investors are doing in the markets. There are times market will give a genuine opportunity at the opening also. So those are the nuances you have to, over a period of time, you have to learn from the profile. In fact, there is a small promo over here. So we've been doing an TradeZilla 3.0 session. This April 18th, we are starting a new batch. Of course, we are going to cover 85 plus hours of live learning, which includes live training sessions also. During live markets, in the morning we'll be spending 1 hour, and afternoon we'll be spending 1 hour to read the markets at the open. Should I have to trade at the opening or not? How to watch the markets around the open, and how to watch the markets during middle of the day. So most likely it suits for active intraday and very short-term traders who want to understand these markets much better than anybody. And we're also having an interactive community for active learning. We have something called Slack, so where I'll be keep on posting all the to all my members. It's a private channel, so where we'll be keep on talking about the market activity throughout the day, and we'll be keep on sharing the market activity itself. In fact, I used to keep on post every half an hour once at least, most of the active days. So we will be keep on talking about what the market is doing, what kind of confidence is there, what is happening, where the market could move, and why it could move, like what kind of confidence is going on. Every half an hour, what I'm seeing here, whether this level is weaker or not weaker, where the point of control is getting formed, why the markets could find a price. We talked about, right, why the price, where the fair price can happen over here, right? That points how we know that whether it's an shorting odds or not, where is the breakout failure, so is this a short setup or not. So those kind of discussion will be keep on doing in our private trading community. Of course, we have very highly active members. They keep on asking questions and also answer at times, mostly during live market hours. As of now, we have close 994 members in this channel, and some other people are they belong to algo trading community, so they are sitting in algo trading and AMI broker channel. So we actively engage in this interactive community every day. This group is almost now 4 years old, I guess. We started during 2016. Every day, at least we used to keep on discussing about the market structures. We keep on talking about the traders' behavior, and we keep on talking about the trading opportunities as well. So more than trading opportunities, we will talk a lot about market structures. So we have a fair idea. Right? This is a repeated thing we have been doing since, I think, 2012 onwards, 2012-13 onwards, I started reading market profile. And 15-16 onwards, I actively started looking into the markets on a daily basis. I watch at least Nifty, Bank Nifty, Reliance, HDFC, those kind of top level scripts, what it is doing. I have a fair idea about it. I keep on collecting the data. In fact, I used to organize these data in an Excel sheets. Every half an hour, I keep on recording, and what I used to post I have my top-down analysis, what it is doing, and what level I should monitor. These are the daily preparations we'll be doing. Like, what is the overall sentiment for the day? Where is the support? Is the market has been topped out or not? So what level I should focus, and why I have to control my emotions, why I'm seeing a small opportunity, or why I am seeing a bigger opportunity. Everything we'll be talking in the Slack channel, and this is a routine process. So what I had done is that I had converted into a process. That process is what we call it as a TradeZilla 3.0, right? So which we'll be doing this, TradeZilla is not something new. Right now we have a version called 3.0. That means over a period of time, based upon our understanding, we had cultivate as a process. That process is right now 3.0. It's getting matured and matured. Every time we are seeing different information or different opportunities or different patterns, we keep a note of it. The whole idea is always to understand how to take a better judgment all the time in the market, especially if you're an intraday trader or a short-term trader. So primarily, the TradeZilla contains two different themes. Like, one will be using market profile, and another one will be using Orderflow. So the primary idea is to trade any classes, not only any asset class. It can be index futures or stock futures or commodities or currencies. If you tomorrow, even if you want to go and trade US markets, you should trade confidently by looking into the buyers and sellers behavior, because the auction process, probably the price discovery process we talked about it, it's same across almost every market. Every market opens only to find where is the fair price. So you can understand if you understand Nifty, Bank Nifty futures, you can understand stocks. If you understand stocks, probably you can understand US markets also. If you understand US markets, you can understand currency markets. If you understand currency markets, the auction behavior, you can understand commodity markets, basically. So basically, you can learn to trade any kind of markets. Probably the whole idea is to understand to trade in any kind of market scenarios. Maybe it could be a trending market, sideways market, compressed, high volatile, low volatile, and also understand the market dynamics, how the supply and demand about the traders are. So especially understanding what scalpers are doing, what intraday traders are doing, what short-term traders are doing, what medium-term traders are doing, what long-term traders are doing. So all I can guarantee you is like kind of an institutional grade mentorship program. So we'll be using, to explore the edge, probably we'll be using three things. One is market profile. In short, we call it as an MP. And second one is we'll be using Orderflow. So OFA, Orderflow Analytics. Mostly this we'll be using this Orderflow tool for scalping. And the last one we'll be using something called Dynamic Volume Profile. So these are the three principles we'll be using to understand the auction, to understand the trader's behavior. So market profile I explained. I guess you have a fair idea about what the market profile does. The same way, probably we'll be using the other tools like Orderflow and the dynamic volume profile. Everything talks about the same thing, how the buyers and how the sellers are behaving. So that's what we talk about mostly. That helps you to understand the market dynamics, that helps you to understand always to take a better trading decisions. I guess now you understand the first slide, right? Now, I guess if you go back to the first slide, now you know what the Peter Stadelmayer was talking about. So now you know the meaning of why the market profile is so useful. So it helps you to understand the present, at present what is happening. And if you know what is happening right now in the present, you can make better decisions. Always. That's the primary goal of market profile. All right. So maybe we'll come back and we'll talk about more interesting topics. We'll keep on conducting such kind of sessions. And yes, that's the part of webinars. And if you don't understand webinars, you can always go to webinars.com. Such kind of interesting sessions we keep on conducting at webinars. So make yourself, the whole idea is to make the traders to become an professional and independent traders, independent thinking, to try to cultivate independent thinking. That's the primary goal of webinars. It's an online community basically to help traders to bring the power of understanding of the markets, not only the market understanding, but also the self-understanding. So we train them not only from the technical side, but also at the personal level, how to cultivate, how to not to become an emotional trader, right? So how to become a confident trader. So that's what the primary agenda is all about. Thanks for coming by. And especially the lockdown is going to get extended. So maintain social distance. That's what I can say that. And yeah, it's a painful period, but I guess we will get through this, right? So hopefully things will get resolved on its own. Thank you.